startup or an existing provider such as a bank. So to begin with, are fintechs what they say they are? It's a topic which is quite controversial because it is the premise on which millions, if not billions of dollars are poured into the ecosystem on an annual basis from venture capitalists and angel investors alike. What are they spending their money for? Are they spending money for a 1 in 10 chance of a unicorn? Or are they just putting money away into institutions which are doomed to fail with regards to a fragmented ecosystem which still doesn't have a mature enough regulatory framework to support the ambitions of startups around? And these are some of the topics we're going to be touching on. So without further delay, and on the background of the topic, it gives me great pleasure to start introducing our panelists for today. Starting with Mr. Raja Debnath. He's the managing partner at Cognizance Labs, a full-time service management consulting firm exclusively focused on retail, SME banking, and supply chain finance. He's also a board advisor to multiple startups, including InfiniSystems, VFin, and a supply chain finance technology platform. Good afternoon, Mr. Raja.
Very good afternoon, Gaurav. Thanks.
Thank you for joining us. Our next panelist is Mr. Devid Jegerson, or Gergen. Sorry if I've said your last name incorrectly. I hope you correct me at some point. But Devid had joined National Bank of Fujairah as the head of customer experience and platform development. He's responsible for spearheading the digital transformation within the bank and all the work in terms of agile systems and working with teams to leverage emerging technologies to drive their business forward and serve clients through the best customer experience. He's also had extremely interesting exposure to very nimble startups in his previous lives as well. I'm sure he'll elaborate on that. Good afternoon, Devid.
Good afternoon. Thank you for inviting me.
Panelist, no, of course, thank you. Our next panelist is Mr. Mohamed Aziz, the founder of Dubby. Dubby is a company which seeks to upset this current status quo of fintech, but also at the same time enable it. A unique startup that does open banking API connectivity, working with existing players as well as new ones that pop up. Good afternoon.
Thank you, Gaurav. Hello, everybody.
And our last but not least, we have joining us Ayman Dababneh. And Ayman is currently the business development unit head at Dinarak. It's a PSP where he's leading also the commercial initiatives, the fintech solutions, strategic partnerships, and alliances. He's going to be representing Dinarak today, coming to us live from Jordan. And I look forward to hosting you on the panel this afternoon as well.
Hello, dears. Thank you, Gaurav.
So I think, I'd like to start in the order I've introduced you to. So, Raja, what I'd like to do is I'd like to take the opportunity to ask, currently speaking in the system today, are fintechs, are they what they say they are? From your perspective, what have you seen recently in a fintech? And please refer to real case examples as opposed to opportunities or potentials. I'd like to know what startups you've seen under your purview today, with one example in particular, that's disruptive. And why did that journey come about? What was the initial thought process that enabled those people to say, we need to start this company and this needs to be changed within the fintech landscape?
Thanks. There are multiple companies which come to mind. And I think the term that everybody uses, fintechs, and tries to bunch everybody up together, I have a dispute with that itself. It's because the fintech ecosystem is a very large ecosystem in that space, and trying to use a broad brush sometimes is a disservice. So there are fintechs, as you rightly said, who are doing great, and there are some who are doomed to failure. There's a lot of innovation which we are seeing happen around in every market. There's one which I can talk about here is something on open banking we spoke about. So let's think of digital banks, which are not digital banks in a standalone basis, which have licenses, but which are sitting on top of multiple banks and aggregating.
Okay.
That's something which we are seeing in a couple of markets, and that seems to be doing pretty well because there are too many banks in most markets that we have seen.
Okay.
And within that, it's only the top tier, the top maybe 5% or 10% of the banks, which have their digital journeys somewhere on the line. So the vast majority of the banking sector as such is actually very grateful that there is somebody who comes along and is able to help their bank customers to actually reach out and get a wonderful new digital interface. Which
So take us through an actual example, Raja, if you don't mind.
In India, let's take a company in India called Open. The name of the company is called Open. They are taken on the segment of SME. They say, we will target only SME customers. And they basically sit on top and connect to various banks. So I could be a bank, I could be banking with any bank. If they have a partnership with the bank, I then go in and map all my accounts to this particular bank. So I then stop using my bank's mobile banking. I go on to Open, I start using Open as a mobile banking solution, which aggregates all my accounts from various places. So the bank which I had, suppose it was a fuddy-duddy old bank, they do not have a great interface. They don't have the right products, but this Open as a bank understands what I want, and therefore I get the best features. They don't have control over my money. My money is still with my bank. So I leverage my bank's license. I leverage the trust of the bank, which I have, and get best-in-class services from a digital player.
Now, how old is Open as a company? Because if I have to trust an unregulated entity to be my interface to my trusted entity, which is my bank, right?
Yeah.
That sounds like it's a problem that's worth solving, but that doesn't sound like something that can be solved overnight. How old is Open as a company?
3-4 years old.
And how big is it now?
They have a few 100,000 users already, SME customers using them.
Okay, so it's a B2B service.
You could think of it that way. It's at one end it's a service to the bank. So there are two legs to it. One end is their service to the bank, which is a B2B leg. On the other end, it could be called a B2C or B2, because the customer which is there, the customer could be proprietors for all you care.
Okay.
They could be proprietors, they could be gig workers, they could be freelancers, they could be people who just want a digital banking experience. Because what the Amazons of the world have done is, our expectation of what the user experience should be is they've taken it to a different level completely. And that's where most banks fail. And banks sitting on legacy systems usually becomes very difficult for them to be nimble and keep adding in new features on the fly, which somebody who comes in and says, I will do the heavy lifting of doing the plumbing with your legacy system. I then come in on top, and then I'm ready to add new bells and whistles as it goes along.
Let me pause the conversation there very quickly. Fast forward 2 years from now, where is Open? Is it a company that is growing massively, or is it a company that's just trickling along, or is it a company that's over? I mean, too expensive to manage, maintain for very little revenue.
So in the current scheme of things, in the current environment that Open is operating in, if you fast forward to 2 years, they will still have 80% of the banks who would still want to do business with them. So they will continue galloping ahead, and their numbers seem to be showing that the numbers are moving at a very, very fast clip. With not too much of marketing. Most people don't know.
I see what you're talking about, and thank you for that. That's something that's definitely interesting to look up after the conversation as well. I think I'd like to shift to David. In your perspective, just not necessarily on what Raja has said, but from your opinion, taking a little bit of what he said from the question. Fintechs doing what they're doing aren't always working against banks, right? They may be working with banks or enhancing banks. In your role currently with the bank, you're driving customer experiences which have come more to the forefront of customer acquisition or customer retention as a policy for any fintech, right? Especially institutions such as yours. Could you tell us more about what kind of markets you're looking at, and whether you're working with fintechs or you're building your own strategies internally and building your own technologies to do that?
So Gaurav, let me just say one first thing, that I'm really convinced that the fintechs, as you call it, but I call it teams, because our teams, very clever teams that are working on technology, they are helping the bank. So they are collaborating with banks. They are not going against the banks. Also, for example, if you take a look in Europe, Revolut, N26, Monzo, and all these kind of new entrant, new players, they are helping the bank in a specific target of customer that banks typically they are struggling to reach, right? So in some extent they are collaborating with them. So first of all, second, the banks are, as you can imagine, different from fintech teams in many ways, in sites, in focus, in many ways. And I can tell you one thing, in my experience, I spent some year in PayPal, and in 2004, when we are trying to expand globally from San Francisco, I was leading the Italian products. Already in that year, PayPal had a specific department called customer experience with 88 people that every single day, every single hour of the day, they will double checking the movement of the mouse and the behavior of the customer during the payment processes, right? So that is the kind of dedication that the fintechs has for the customer, for improving the experience of the customer. And this is something that banks doesn't have. Banks is much more focused on compliance, of course, because it's a key ring in the trust of the system, and need to follow specific processes, need to follow specific compliance to keep low the frauds. And the fintech can help a lot in using technology and create products for the customer that are really good. So that's my thinking.
Okay, and I think, you know, leading on from that, Mr. Aziz, you know, we live in an ecosystem where people talk about asking, you know, for forgiveness later rather than asking for permission first. And what I mean by that is, and what Devid also talked about was about, you know, banks being regulated entities. So they have to look at compliance, they have to look at how they're meeting those standards. And these days, startups and fintechs especially are encouraged to provide services, you know, now as opposed to being regulated, because regulation has yet to catch up with the needs of either consumers or I would say the demands of consumers rather than the needs of consumers, the wants, right? So, I mean, from your company, I think what I'd like to understand is how much of it is collaboration versus competition, and how much of it is asking for forgiveness rather than asking, you know, for permission in the beginning, because what you're doing is very, very radical, is, you know, in terms of Dappy and its open API banking.
Thanks, Gaurav. I mean, you know, for context on that. So, I mean, obviously, you've got the famous Silicon Valley saying of hit the road right now and ask for forgiveness later. On our side, Dappy was really built on the premise of, excuse me, guys. You know, we built Dappy on the premise of being able to power fintech. And I mean, again, I really like something that Raja said earlier, which was around the fact that, you know, clubbing everything into fintech is what he's got a problem with. And I think that's true, right? Because in the past, due to the lack of infrastructure, a lot of fintech has just not been possible. The Revoluts of the world and the Opens of the world, they've just not been possible in our region, particularly MENA, because of the lack of infrastructure. Now, we started off Dappy with one mission. We said that, you know, we would come together. Again, you know, the founders of Dappy were, you know, all of us individually, we're trying to build different fintech applications. And we weren't able to do so just because of the lack of connectivity with banks and infrastructure. So initially, we said, okay, we're going to do whatever it takes to make this happen. We are going to collaborate wherever there's room for collaboration. And where there's no room for collaboration, we're going to build infrastructure to the best of our ability anyway. And eventually, regulation will catch up with us. And that's the only way that, you know, we can really disrupt. So with that being said, there are obviously a couple of financial institutions, including, you know, NBF, David is over here. I think we've got a separate conversation going on, HSBC, and a couple of these banks that actually see open banking as well as opening up APIs to a greater, you know, to a greater fintech ecosystem as an advantage. while you definitely have certain financial institutions that see it as a threat, and I feel like this love-hate relationship is it's normal. It's there, and it's existed in almost every other major market, be it the U.S. or whatever market you think of. But I think one of the things that the fintechs would need over here, definitely along with regulatory support, which we are seeing with the likes of ADGM, etc. I think things are definitely starting to change. But coming back to your question in terms of how much collaboration we have at this stage, I would still say that there is still less collaboration and more of Dappy trying to just build the infrastructure anyway, activating the fintech ecosystem, gaining leverage through an ecosystem of fintechs, and then simultaneously approaching banks to collaborate.
And I'll come back to geography for each one of you later on, right? Because the Middle East and Africa is a unique ecosystem. India is a unique ecosystem. And I think, putting this context of the conversation is very important. So geography is going to be a topic which I'll bring up later on. Ayman, last but not least, sir, I'd love to get your perspective on how you actually started your journey, because as a company that's working in the Jordanian ecosystem, providing a wallet with a switch that was designed to enable and facilitate that ecosystem, how did you come about the journey? How old is the company? Where did it start? And where is the company today? I'd like to, if you could give us that background, that would be very interesting for us to understand.
Sir, thank you so much. Actually, the Dinaric started 4 years ago. There is a new initiative for the financial inclusion for Jordan. As in Jordan, we have around 10 million people in Jordan with 1.5 million refugees. The unbanked people are almost 60% of the population.
Wow.
And the needs, we find a huge need in the market from different verticals. If we're talking about the end users, if we're talking about the merchants from different industries, and the digital acceptance overall, we find this opportunity, and we got licensed by Central Bank of Jordan to operate on the Jordan Mobile Payment National Switch. This switch is supervised by the Central Bank of Jordan. Till now, we have more than 230,000 customers. And I'd like to mention that since the COVID-19 pandemic in Jordan, because the Central Bank of Jordan has allowed the electronic landing of customers, where we get more than 100,000 customers. We have implemented many programs with the Jordanian government for the welfare program to support bread subsidies, let's say, and the per diem jobs who got affected via the pandemic crisis. And the most amazing number that we got more than 3,000 merchants to accept mobile payment transactions in their small shops. Maybe those shops will be like supermarkets, a grocery, and even some technicians as well.
So, Ayman, sorry, is that the total merchant base that you have is 3,000, or is it 3,000 new signups? Sorry, just to clarify.
No, this is the new merchant signups during the COVID-19 lockdown.
So just a quick question for you to put things into context. How many banks are there in Jordan right now?
We have 24 banks in Jordan.
So with 24 banks in Jordan, they still couldn't fill the gap of the service requirement that you're filling today. With how many merchants and how many customers using it?
Well, the thing's a bit different in Jordan because for the merchant side, there is two dominant players in Jordan for the acquiring system, which to accept payments through cards. So the banks are not into the acquiring system. The mobile payment service providers
but you have Network International, you have MEPS, you have these companies operating.
Yeah, we have MEPS and we have NI, Network International, as acquirers.
Yep.
And now Dinarak is working as acquirer for native mobile payment transactions according to the national standards for a QR code as well. We enabled this feature before 10 days, 2 weeks, and we are finding a huge demands from the ecosystem to activate the QR code acceptance. It's worth mentioning that the Central Bank of Jordan is supporting big time the mobile payment service providers via regulations and through the acceptance. Even nowadays, when things are going better in Jordan, how we confront the COVID-19 crisis, it's eligible by the Central Bank of Jordan. Any merchant should accept electronic payments to avoid the cash use to transport the virus.
Okay, thank you for that. The next round of questions I have.
Gaurav.
Sorry,
Gaurav,
please.
Just to round this off, the question that you asked, that all of us have said that yes, fintechs are good for the banks, but that need not always be the case. Because
yes, Raja. So that's coming to my next question.
I work on two sides. So on one side, I work with banks and regulators. On second side, I run my own fintech. So there are times when whatever we have said, we have only showed the good side of it. But banks have a quarterly report to be done. They have a quarterly profit target. Fintechs, if they are well funded, they have a long runway. They have everything to gain by just dumping money in the market and acquiring customers. What point in time do you think that the fintech is actually not helpful to the bank or to the banking ecosystem as such?
So we'll address that question. I think we'll get to that question towards the end. But what I'd like to do is because we have the panelists here from different parts of the industry enabling different ecosystems, I think what I'd like to do is try and frame conversations around how all of them are participating in their own journeys in the context of what's happening. But valid point. Thank you so much for putting that forward. It is interesting to absolutely realize the dual hats that you wear, which is unique. And coming back to the next point that I wanted to bring forward is the context of geographies, right? Raja earlier on brought up a conversation piece about India. When I do a pilot in India, one of my portfolio companies, their first pilot 3 years ago was with 10 million people. That's quite a nice size pilot to run, right? So context, right? Horses for courses. And what am I talking about? A lot of the startups and ecosystems and companies that we see being built in the Middle East and Africa region are not unique. They are initiatives taking inspiration or initiatives that have already happened in San Francisco, in Hong Kong, in China, and we're applying them to the Middle East market. There are very few fintechs that are unique, and that's not to fault them. If there's an opportunity, someone should seize the opportunity. But what I'm trying to say is that leads into my next question, which is aimed at all of us here, right? I may be doing a business that may not be unique necessarily, but the way I bring that technology and address the markets in this region has to be unique because it's a fragmented ecosystem. Saudi Arabia has its own rules, regulations, it has its own context and size. The UAE, the same. Egypt, the same. I could go on, but without the sake of being obvious. I think what I want to talk about is, let's ask, someone like Devid, right, who is operating currently in the UAE regulatory framework. And what I want to understand is, Devid, from your perspective now, right, and your perspective earlier as well, startups, in this ecosystem have finite lives because they're not able to navigate this fragmented ecosystem. Do you think many are going to survive, or do you think many are simply not going to be able to navigate growth or the right opportunity in the right market and fail? From your perspective, because you're sitting there and we talked about you're going to work with certain startups, but you're going to control the way you consume startups because you have a very long-term obligation with your customer, right, as a regulated entity. What's your take on this? Do you think they're going to survive and thrive, or do you think majority are going to die? miss the boat
Gaurav,
completely just because they're copying what other people are doing in the US or in China?
No, there is I think that is rule for the market, right? It's the market that will decide, and consumer that will decide which are the fintechs that are proposing the best product for them. This is valid for the bank. This is valid for the fintechs. I think that who is driving is the market. It's not driving central bank, at least on the customer side or whatever. To be honest, I'm optimistic in sense of I see that there are many opportunities. If you see this stage of this kind of market from a regulation perspective, from a digital perspective, is a market that is growing very fast. And there are a lot of opportunities. Opportunity for the bank, opportunity for the fintechs. The way in which the banks can leverage the fintechs and vice versa is key, and I will not opposite them, because again, each this kind of role has specific features that are complementary. So again, the bank are much more on the compliance side, on the process side, on the preserving the bank infrastructure, the financial infrastructure. The fintech, as Raja said, is much more focused on the customer, right? On delivering and the technology and delivering the product that is very useful for the customer. So I think that still there is a lot of good thing for both. The point is how they can collaborate, because many times happen that if a fintech is going behind the barriers, let me say, of the bank, the fintechs find a lot of rigid processes, strict procedure and whatever. So sometimes the output of this kind of collaboration is not so good because of the rigidity of this kind of environment. The point there is to try to find the best way of a sort of area in which both of them can collaborate and create products, strong products. And there's a mix of factors, a mix of procedures, a mix of product thinking, customers. So that's, I think, is the key. If we will find the best way to collaborate, we can drive both of them. Because at the end, the customer is on both sides. The same customer is owned by the bank, is owned by the fintech.
So I think to summarize, the market's going to decide the fate of these companies. If I was to dig a little bit further into that, and Mr. Aziz, back to you, going into the survival of these startups and where they're going to be able to thrive or they will die. A lot of it also is down to, when we compare these companies that we sort of copy paste and bring here, and then we try to tune into this market. A lot of the companies that are started out in these other geographies, mature markets, if we want to call them, have very established founder sets. They usually come from companies that have, they've exited 2 or 3 companies, they've done very well, they're either experts in their field. But in the Middle East region, a trend for the last 5 years, because it's very new, is that anyone from any background can try any startup. But do you think that when it comes to open banking, which is so new, and how many people have that much experience in open banking for the last 25 years? The answer is nobody. No one exists on the planet that had open banking, for so long. So in your scenario, where how are you working with experienced people either to support you or guide you on what you're doing? Because it's so limited in a framework where it could be anyone's guess of how you grow or you don't.
So I think, in terms of support, I feel like, especially in today's world, and I think the COVID situation, the one thing it has made evident is that, globalization is kicking in, and like connecting to people all around the world has become easier than ever. And just talking about experienced founders, right? I agree to some degree as to what you say, but I mean, let's look at certain fintechs. The Stripe brothers, they built an empire. They never built, anything remotely close to that before that. The guys who built Brex, the big famous corporate credit card, the guys who built Brex actually started off trying to build a VR gaming company, and they pivoted to building Brex. And now everyone around here is, is now trying to build the Brex of the Middle East, right? So, I mean, it comes back to the point where I feel like in today's day and age, one is that it's become incredibly easy to connect to some of the best in the world, or rather, people who are way better than you and have much more knowledge than you in a certain space. And also, to some degree, the copy pasting of models. And there was a bit of mention earlier in terms of how there are a lot of these different models which exist in other parts of the world and are being replicated in emerging markets like the Middle East, Africa, etc. On one hand, I mean, it's a great thing, right? Because VCs are willing to pump money because they've seen the model and they've seen this thing work, and now they're ready for this thing to work in an entirely different geography. And what's it called? The second thing is obviously localization does come to play, but with replicating some of these models, one is that you suddenly have access to a lot more people in other parts of the world who've done this, so you can definitely connect with them, or potentially benchmark as to what you're doing versus what they're doing. And the second thing is, I think, again, I do talk a lot about regulators, etc., because at the end of the day, regulators can either become your biggest opportunity or your biggest bottleneck, right? And one of the things that I've personally noticed is that if you're trying to do something that's brand spanking new and has not been done elsewhere in the world, and you go up to a regulator in one of our markets, the immediate response is on the lines of, hey, has anybody done this somewhere? Versus, I mean, talking about open banking, for instance, today, like if I go up to a regulator, we've got, we've got the PSD2s and the open banking standards of the UK to at least benchmark against. So I think, all of these things jointly sort of put us in the situation where we are.
Great insight. Thanks for that. And I think, Raja, that's a natural evolution to you, because on one side you're working with fintechs, right, following the journey of what Mohammed's doing, and then you're enabling people like Devid also on the other side as well, right? So the visibility for you is very good. And I'm curious. I do pretty much the same thing in my role as well, so I know my perspective. I'd like to understand your perspective on just taking Mohammed's conversation a little bit further on and saying how much of what you're seeing in the ecosystem is unique and how much of what you're seeing is just something that is a natural evolution of what the rest of the world is doing, like Mohammed has said.
I think what Mohammed said is absolutely bang on, that with most emerging markets, if you go to the regulator with a brand new thing, you're more likely to have it thrown out.
Right.
So because regulators are usually behind the curve.
Right. But remember, it's just your perspective. I wanted to understand, because you're seeing both sides of consumption. What are you seeing is unique, and what are you seeing that's adopting up to global standards, perhaps, or technologies that are normal abroad or standard today?
Most of the technology, what we are seeing, or most of the ideas that we are seeing, are either coming in from the European markets slightly, not European, but more UK specific, and China. These are the three markets from where you're actually seeing a lot of ideas actually coming in. So there used to be a saying 10 years back in the UK that the VCs in the UK would fund something which the US guys had done, and they had seen it for 2 years. So it's just with globalization, what's happening is these time periods are shortening, because now you no longer have to wait 2 years to see an idea mature in some other market and bring it on. And that's what we are seeing. I wanted to touch on the other point which you spoke about, geography. Middle East, with having small markets, becomes very difficult, okay, for fintechs. And therefore, if I am a bank and I'm trying to work with fintechs, one of the most important things which I need to see is what is their revenue model, whether they will. So your question, which was that whether they will survive or not, I think a bank needs to wear a hat very similar to the hat of a VC in that sense, because you are taking your customers, your best customers, and giving it to them. You do not want disruptions out there. And how can you understand whether you have disruptions or not? By looking at their business model and whether this is a cash guzzling business model which will last only till the time cash is being pumped in, or whether this can stand on its own feet. And that's something which is very important for Middle East banks when they're partnering with fintechs. The tons will die.
I think, Ayman, from the side about a company that's going to thrive or die, it's pretty clear that you're thriving from what you had said in your earlier conversation. You've been around for 4 years, you're clearly growing, you're servicing a part of the market as a fintech that required it, even despite there being, dozens of banks where you are. Just taking forward the company itself, I mean, what I would like to understand is, when a company has established itself, you're no longer a startup. Those days are gone. You're a company now. It's nice to think you're a startup, but halas, no more startup. Now you're a business, right? You're mature. You've got 4 years. How many employees have you got today?
We have 45 employees.
No more a startup. Okay, no more. Okay, so you've got 45 employees. You're growing. What I want to understand is, now where do you go? How much of what you are doing is going to become like NI or like MEPS? Are you going to do third-party processing? Are you going to do issuing of cards? Are you going to go into other geographies that need your services? Are you going to go into the Lebanese market? Are you going to go into Egypt? Are you not going to go into those markets because they're saturated? What I'd like to understand is, for a business like yours now, that's reaching a point of doing what you're doing is fine. But everyone knows you've got to have a product roadmap, you've got to increase revenues, you've got to grow, right? To survive and keep growing, right? Because you have investors, right? You have investors and you have to show them a return, and the company has to grow. So are you going to be growing on a geography basis, or are you going to be growing where you are on a technology basis to start with? That's something I'd love to understand.
Okay, actually, we have learned a lot from our experience in the Jordanian market. All the technology companies, they know that Jordan market is a real pilot. So if you succeed in Jordan, you can succeed anywhere, especially in the GCC. And honestly, since we have started, we provided not an innovative solution, but we make it innovative through how the way we communicate with people, how to make it localized, how to make everyone benefit from the wallet. The wallet itself, it's the same, with the same feature. It's sending money, merchants payments, national bill payment, and the presentment. So all these features are very well known across the globe, nothing new. But the way you address it, the way you fulfill the need of your target audience, and based on the segment, which make it more accessible and more convenient to people. We in Dinarak, we believe in this since we started, and even inside Jordan, we have split the geography. We started in the north to understand the trends, then we shift to the middle of Jordan, then the south, and now we're covering the 12 governorates across Jordan. And since 2 years, we've noticed many interest from investors across the Middle East. They come to Dinarak office, they see how we operate, what should be done, how we do it, how to introduce another service. So our expansion, we're really excited about the future, actually, what we can do. Our plans are massive in Jordan and in the region as well. There is a huge need, even in very advanced countries. There is a need for the mobile payment and other services. So our expansion will be based on a product, new products and services customized, and to launch the mobile payment service in different countries across the region.
Thanks so much for that. In a moment, we're going to start taking questions from the audience that's joined us today on the session, and we can direct them to the panelists, so all of the panelists, given the amount of time we have. But just to summarize, the key takeaways of today's conversation, I think it's important is, and thank you all, the panelists, thank you for your time. Really value the fact that you've come together and you've shared personal insights on your journeys and information that is unique to you. So innovation doesn't have to be unique. I think that's the first thing we've taken away. Innovation can be taken from previous experiences globally. I think it's interesting to see that corporate entities that are regulated aren't taking a combative view when it comes to startups, but more a collaborative view. There's enough for everyone. I think it's also great to understand that there are gaps in the market that are still yet to be addressed. And it's more of a harmony than blood on the streets, especially during times like COVID, where people need to advance, enhance, and work with each other to offer services. Because at the end of the day, consumers are the primary target, and being serviced either in an independent or in a collaborative fashion only grows the ecosystem. I guess the only thing we have to learn together in this early days of our Middle East and Africa startup ecosystem when it comes to innovation and fintech is, with businesses that are doing the same thing as each other, how many will survive and how many will not, right? Because in a fragmented ecosystem, there can only be a few clear winners, as we've seen when it comes to the Kareem and Uber story working together. At certain sizes, collaborations still happen, which is interesting. So I think what I want to do is Melissa, can we start pulling together the first questions from the panelists towards the panelists, please? I believe Jyoti was the first person. So, okay, Jyoti, I'd like to invite you to ask your question, and please let us know if you're directing your question to a particular panelist or all of them. Sorry, Jyoti, are you available? Melissa, I don't think we have Jyoti with us anymore to ask the question. Can we get the next question put on, please? Miran, hi. Would you like to ask your question, please?
Hi, Gaurav. Hi, David, everyone. Thank you for this discussion. It was just very, very interesting. I wanted to, apparently put the spotlight on the user experience. Apparently, this is something that kind of makes or breaks the fintech success. As you were saying, David, it's at the end of the day determined by the market as to which ones will succeed and which one won't really make it. Is it all centered around the ease of use, the user experience? And what if the banks start to focus on that? I mean, you were saying the banks usually don't have the time or energy to track every click that the users make. But what if they start to do that? Would that be kind of detrimental to the fintechs?
Is it for me, right? Because the audio was a bit noisy. Hi, Miran. Thanks for the question. In my view, I'm really convinced, as I know the bank's DNA and as I know the fintech's DNA, that the banks has very difficulties to reach that kind of experience that the fintech can put in the market with products that leveraging really good in the best ways as possible the technology that the banks doesn't have. So in my view, the best way is a collaboration in which the banks admit that is a playing field that cannot play in some extent because of the limitation of our DNA, and try to find the best way to collaborate, but in a sense of process on developing something all together. It's like having a sandbox, an area in which we can create the products, develop product all together. So that's what I'm thinking. I don't know if I replied to your question.
Yeah, I mean, obviously it's a collaboration, and I was just wondering if you had any examples where you have leveraged that strength of any fintechs, whether for the end user or for even the internal bank staff, because that's also a key.
Yeah, give me a example.
Yeah.
Regarding MBF, you know that MBF is a corporate bank. So we are focused on business and corporate. Of course, we have also retail, but is a less percentage. From last year, we built up a completely new digital platform for the SME, and building up this kind of platform through the help of partners, fintech partners that are using technology better than us, better than the bank. We built up a completely new concept of the platform, leveraging on the community. The way in which we are building, we build the platform, and we are building up because it's a journey. We just released last year the first version, and following version last month. The way in which the agile way and the way in which the social way in which we involve the community, it came from the idea from the Fintechs, and in which all together we tried and we are trying to satisfy the needs of the community. But again, the way in which we are sharing and reading the feedback from the community that is our customers, is a customer for the platform, because we build the platform for them and they build the platform through us. That is the best example. I don't think that the bank alone would be able to build up everything by themselves. There is an example, for example, in Italy, just to say that I didn't invent nothing new. It's called Widiba. Widiba is a retail bank, has been launched in 2014. They takes 18 months for create from scratch, completely retail digital bank without branch, actually with 2 branch, because for the regulation in Italy, if you access to the bank license, you need to have at least 2 physical branch. They built up all the bank with the community. In 18 months, they developed through the community an entire bank. And this is, I think, that is a new way to build product, bringing value to the market, finding which is something that is a friction for the customer, and try to find the best way through your competencies in terms of compliance and regulation, and through the competencies from the fintechs that is really strong in terms of acumen for the customer and building product that using technology very well to create value for the customer. That should be, I think, the best way to thrive in the market in the next 5 years.
Thank you so much. I think we just move to the next question from, I believe, Prakram Gill. I believe you have a question for one of the panelists.
Yeah, hi. I think it's not pointed to a specific panelist, but probably just a general question, right? You have, I mean, we understand the environment today, it's tough for fintechs. So what is the best mechanism, or when do, I mean, some of these experienced people see to have a more conducive environment for fintechs to actually be able to do or sustain business, right, at a equivalent level?
Are you talking about from a regulator's perspective? Are you talking about from a company setup point of view? What's the perspective that you'd like?
I think, yeah, it could be a regulator. Definitely, regulation is a part of it. But I mean, if you look at collaborating with banks, I think they know they understand the regulation environment pretty well. So for them to manage around it and to collaborate with fintechs, it's much easier.
So your question is how conducive, or when do you think it'll be more conducive for fintechs to have an easier path to come onto markets as solutions? Is that correct?
Yeah, definitely. I think that's the question, actually.
Okay, great. So I think the first person that I'd like to address this to is Raja, actually. Raja, from your perspective, right? Again, you sit on both sides. You have a unique perspective. You're working on enabling the incumbents, and then on the other side, you're trying to disrupt them, right? Your answer to Mr. Prakram.
So, Prakram, I think as a fintech, the advice I would give to any fintech is you are supposed to, as a fintech, play in the white spaces of regulation. Do not expect that the regulation is going to change because you have a new idea. So that's a no-brainer. You should not pin your hopes on that. Regulators will not change, and hoping that they will change. I've been at this for last many years, regulators don't change. The person changes, a new person comes in who has his own learning curve or her learning curve, it will not change. So find regulatory arbitrage, because that's what fintechs are meant for. Because when you become large enough, that's when the regulator comes in and wants to regulate that piece of play that you are doing. So that's my advice.
I think, Mr. Mohammed, from your perspective as well, I mean, in relation to Prakram's question, let me ask it in a little bit of a different way. How defensive are regulators in protecting the incumbents versus the disruptors? Have you felt that also as part of your journey so far?
I think what's it called, for sure, and I mean, a lot of this also stems out of the fact that some regulators are slower than some of the others. Again, you know, given the fact that the question was targeted towards GCC, again, you know, without taking names, we're just seeing certain regulators move a lot faster than others, quite obviously. So I think what then tends to happen is that some of the regulators who are slower by default give more room to the incumbents to stick around and survive and, like, you know, not maneuver. That just happens due to the lack of these regulators moving fast enough. However, I think the good at least is that because we're seeing certain regulators in the region really, you know, leap forward and move the bar on things, it's definitely starting to create a new norm in the GCC, amongst both fintechs as well as the incumbents.
Thanks so much for that. I think Ayman, I can speak on your behalf when you say that just for you that after 4 years you've developed the new norm to basically shake up the incumbents. Sorry, David, you wanted to say something?
Yeah, just to add, if I may add just one point. In the top of mind of the regulation, and especially in the banking regulation, central banks, in top of mind they have to protect the final customer, because the final customer that manage that interact with the financial institution, they have in mind to protect the trust that the final customer has in this kind of financial infrastructure. So it's not a protection for protecting the banks. The banks are just little ring in that kind of infrastructure, and they are protecting the regulation for protecting the trust in the system. So it's a much more high level. It's something that is a job that is very difficult. And if you try to see what is happening in Europe, that by the way is much more advanced than in UK, for example, at least in the last year. I'm not talking about the market. I'm talking about the regulation. The PSD2 is very advanced. Is a consumer side regulation. The PSD2 is a kind of regulation that allows new players to come in the market with a specific role and propose through their DNA features new products for satisfying the customer and to overcome some friction that are in the banking structure. So I think that the regulation will evolve, and actually here in the region, the regulation is accelerating the adoption and is very quick and is supporting all the players, including also the fintechs.
Thank you for that. We're going to take one last final question from the audience today. Apologies that we can't answer all your questions, but I'm sure that if you submit any questions that you'd like to ask to any of our panelists or all of our panelists, that the team at the Galaxy with Melissa and Myrna will make themselves available, or an email address for you to post up any questions. I'm sure all of our panelists would be happy to come back to you or have discussions with you post. The last question of the day we have from Maheen Mansoor.
Hi, how's it going? So my question is directly for Mohammed Aziz from Dappy. First off, I've been following Dappy for a while now, and I'm quite impressed with what you guys have achieved. So kudos for that. And my question for you is, are you seeing new business models being activated as a result of Dappy's infrastructure, or are the existing platforms and businesses connecting with you?
I think that's definitely a great question. So it's definitely two-sided, right? So on one side, we've definitely seen a lot of new business models that couldn't exist before, and to be honest, the premise of building Dappy was to empower all these different use cases that wouldn't have been possible. So we're talking about neobanks connecting to other bank accounts, or the Venmos of the world and the Acorns of the world, etc. But what we've seen in recent times is that a lot of existing businesses have also started seeing the value of connectivity, and we've got a lot of existing business models that have also started connecting with Dappy just to provide more value to their users. And these are just across multiple segments, from from used cars to home loans, and like there's just a lot of these different a lot of different businesses that have existed who are able to provide much more value now.
Okay, cool. And just another question. Sorry, this is a little different one. May I go ahead?
Please do.
Okay, how has the COVID affected your transactional volume using the APIs?
So I mean, again, like the fact that you're asking about transactional volume, I think one of the things that we've seen, particularly in the last couple of weeks, we've definitely seen a significant growth in transactional volume, particularly coming in from the remittance business. In fact, I mean, I'm not sure if you're based in the UAE, but quite recently there was an interesting article by UAE Exchange. Sorry, it was Al Ansari, my bad. There was an article by Al Ansari in Gulf News on the front page that basically spoke about how during a time like COVID, credit cards and debit cards are obviously super expensive when it comes to remittance using their branchless product or their digital product. And they made a clear mention of how existing mechanism of doing bank transfers are just super cumbersome. So it's a trade-off between paying a high price or a horrible user experience. And I think given the fact that we have now bridged the two by providing a phenomenal consumer experience with a significantly lower price, from a couple of markets with particularly the remittance industry, we're seeing significantly higher volumes than pre-COVID.
Okay.
Thanks so much. Again, just to wrap up the conversation, the key takeaways are collaboration, not competition. I think it's still early days when it comes to looking at where we're going to be. I think it's going to take another 5 years for all of us to look back on sessions like these and understand where markets have matured in which fields, providing which services. So stay tuned. I think fintech startups are here to stay, and that's only evidenced by the amount of money that's funding them, progressively increasing year on year. I personally believe that this year will not see a slowdown in fintech funding. I actually see it pivoting from one segment to another within the fintech ecosystem, but still on the whole will go up. I myself am still writing checks as an investor into businesses that are fintech ecosystem players because I understand that, and I'm sure Raja, I can see you shaking your head, you agree as well. So again, thank you all for your time. Thank you for everyone for joining us on the session today. I hope it was as informative, as insightful as I found it to be from the people who were on the panel. And look forward to seeing you in future sessions. Stay safe, stay well, and looking forward to seeing fintechs arise. Thank you all.
Thank you, Gaurav.
Thank you.
Thank you.
Thank you all.
Thanks,
Stay safe,
everybody.
guys.
Thank you, everybody.
Bye-bye. Bye.
Bye.